Eric Muadid, Muadid.com with world market analysis for the weekend of November 7th and November 8th, 2015. Let's take a look at how Asian markets closed on Friday. And we see pretty much a mixed bag. Some markets were down. Hong Kong was down. And we see that the KOSPI was down. China was up, and so was Japan, closing the week with a nice upswing. Take a look at European markets close going into the weekend. We see that again, nice move in the German market, slightly unchanged for the French market and also for the FTSE. Take a look at the Americas with about 3 hours to go before the close here on Friday. We see that Brazil is having a big down session, almost down about 3%, and I'll explain that why that could have been seen on the charts. And we see that the Canadian market is down 0.43%. With about 3 hours to go, US markets also pretty much unchanged, slightly down on the Dow. As you can see here, Dow down about 0.19, NASDAQ slightly up, S&P 500 down 0.4. The biggest movers we see here are gold and crude oil. And so let's go to the charts. We begin by taking a look at the Australian market, and we can see here it's trading back below the 10-week moving average, which is not a good sign. Remember, once it moved below the 10-week moving average, we opened the possibility of this drop. Now we are back below that 10-week moving average. Also, there's an observation here that what was support on the way up, the 50 level on the weekly RSI, was used as support while the market was in a nice uptrend. Even here we can see that the market would trade well. Since then, we are looking at a different situation. The 50 level on the weekly RSI is being used as a place where the market shows resistance and we get a pullback. So net here, it looks to me like the market is suggesting lower prices. That's one view. Take a look also at where it broke down this year. So there was a break somewhere here, which happens to be around late May, early June, right there. And this is this weekly move here. Since then, if you draw a line there, which happens to be around the 50 RSI level, you can see that, again, resistance with a double top around that red line for those tops there. And over the last 3 weeks or so, we hit that level, and now we are pulling back. If we take a look at the Australian daily and draw a trend line connecting recent daily closing highs, should be something like that. Over the last week or so, we came close to that line, and now we are seeing resistance. And also there is the line that we discussed last weekend right there, which became a problem over the last 2 weeks, and now we see this pullback. So, until such a point as the market can move above that red line, this market continues to be suspect in my opinion. If we take a look at the long-term monthly chart for the Australian market, the key is whether it can hold this line here. As long as it is holding this line connecting the lows going back to 2008, early 2009, as long as it can hold, that's good. The only problem is if we end up breaking this line here, any break of that line would pretty much be confirming that this market is due for a major bear market. If we take a look at the Chinese market, had a nice session this past week. And what is taking place is we're coming back to test this previous break level here at about 3,633, the previous break level there. If it can move back above that, that might be good. But I think it's coming to test that. We'll see whether it's going to hold. The other key to this chart is the same observation from last weekend, is this line here, which was a break point. So the break of that line there brought this market down, and we are coming back to test that level. If we can hold above that, then maybe we start building higher. Otherwise, if this is confirmed as resistance, then obviously we should expect a pullback. Keep in mind, the last time we had a strong move was when the market moved above that 50 level. As you can see here, we moved above 50. Market RSI went higher, and so did the stock price here, or the index price. And now we are coming back to test that 50. Anything above that is definitely bullish. Otherwise, anything showing resistance around the 50 level on the weekly RSI would suggest that the next move on a swing trade is lower. If we take a look at the Chinese market, we can see now that it is trading, and many markets across the globe are doing the same thing, trading between the 50-day moving average and the 200-day moving average. So that's the 200-day moving average, and that's the 50. So we are trading pretty much in a sideways market for now, for the most part. And we can see that here we are coming back to a level on the daily where there could be resistance. If you take the highs on the RSI and just extend that line like that, you see it connects nicely to the highs of late 2014, throughout the highs of August, highs of May, and also highs of June. And it is coming back to make that test of that line. Anything showing resistance here would suggest the market pulls back. So that's one view. The other view goes, and you can see that the break that took place on this trend line here on the daily RSI, that break is what brought the market off the highs. So we draw a line from there, should be somewhere around there. And the market is coming back on the daily RSI to test that line. If this is confirmed as resistance, then we should expect a pullback. Otherwise, the market needs to clear that red line if it is to go higher. Take a look at the long-term monthly chart for the Chinese market, and we can see again on the monthly, once we moved above 50 here in 2006, the market had a chance of moving higher. As you can see here, went on a nice run. In fact, a very strong run. And throughout this period here, when the market was not behaving very well, throughout this period, you can see that that coincides with the RSI failing to hold above 50 and moving lower. And this is on the monthly. So every time we stall on the 50 here, the market goes lower. Now what we are looking at is the possibility of the exact opposite, which is that the market is holding the 50 level here on the monthly, which might suggest that this is one of the reasons why it's already behaving well after making some short-term lows. So the monthly continues to look good. It's only when the market finally moves back below 50 on the monthly RSI that one can turn bearish. Otherwise, this monthly chart looks good. Take a look at the Hong Kong market, and just like we've pointed out, most markets are trading between the 50-day and the 200-day moving average, as you can see, which calls for a little bit of a sideways market. We can see on the daily that this market has come back to a level where it has been stalling right there. The most recent stall here gave us this intraday high, and now we are coming back to test that level. We seem to be finding it difficult to move above that red line. Also, there's a line connecting the top side of the daily RSI like that, which is also showing resistance. So this indicates that day to day this market is still looking like it wants to pull back because it has been unable to clear those two resistance levels. Take a look at the KOSPI daily, and just like the Hong Kong market, we can see again coming back to this resistance level on the daily RSI. Anything above that is bullish. Otherwise, if this is confirmed as resistance, we should expect a pullback. Okay, we also see that if you take the highs of the daily RSI and draw a straight line, we can see that this is becoming also resistance. So until the market can clear those two lines, one can continue expecting a pullback in terms of the South Korean market. Let's take a look at the Japanese market, and we can see here on the Nikkei, if you take the highs on the weekly RSI, draw a straight line, you can see that the market is coming back to test that line. Anything back below the blue line would indicate that there's still downside pressure. If the market is to go higher, then the first thing it needs to do is move above that weekly line of RSI resistance. That's one view which might show resistance here around current levels. The other view is if you take a look at a 5-year weekly going back to 2012, and if you take a look at this line here that connected the previous lows, so this line was instrumental in showing support over the last couple of years. Once we broke through that level there, you can see that the market dropped right there. There was a big drop in the market. And now we are coming back to back test that level there. Anything showing resistance would indicate that the market is due for a pullback. So if we get resistance, we should expect a pullback. Otherwise, if the market wants to move higher, it needs to trade above that back test line, something it hasn't done yet. And just like the other markets on the daily, we can see trading here. The Japanese market is trading between the 50 and the 200-day moving average. which indicates a little bit of a indecision in the market or sideways market because it's trading back between the two averages. We also see that it is coming back on the daily on this RSI level where it has been struggling. Ever since we got this resistance here, the market's been making highs every time it hits that level. You see a short-term high in the market, and now we've come back over the last couple of days and we are making contact with the same level. Anything above the red line is bullish, and obviously if we can't move above the red line, then the next swing trade is going to be lower. One of the strongest aspects of the Japanese market right now is the fact that it held the 50 level on the monthly, which is a sign of strength here. The fact that it held there, that's a very good sign of strength. And now the key is in the coming weeks and months, if we can hold the line connecting the lows of late 08, early 09. So if this line can continue holding, the line goes from the lows there to the lows of 2011. As long as we are trading above that line, we should expect this market to go higher. It's only if and when we move back below that red line that one can really start looking for lower prices. But now, if you take the monthly chart by itself without knowing what the other data or how the markets are going to respond in the coming weeks, this is a very strong show that this market is poised to go higher until such a time as we break that obvious line of support. Let's take a look at the Nifty, and we begin by taking a look here at the weekly chart. And we can see that from the price channel here on the weekly, you can draw a channel like that. We came here, made contact with that line, and since then we've been down the last 2 weeks. We can also see a line connecting RSI highs. So this line goes back to late 2014. So this well-established line has been resistance over the last couple of months, and we still continue to see it being resistance. Also, keep in mind that we had come back. Once we broke through here, the market did drop. So we broke through there, which was this drop in the market, and so we can draw a line from there which should give us another sell point down the road. And so there you have it. You can see that the market came back and tested that uniformity line and failed, which is the technical explanation why markets have been down since. Now, one of the, I guess, disturbing aspects here is if you take a look at the monthly chart for the Nifty, the risk now is that this line connecting the lows of 2008, early 2009, and also connecting, so the line connecting the lows here in late 08, early 09, and through the lows of 2012 and 2011, and also the lows of 2013, if this line breaks, that's going to be a major sell signal. And the fact that we are turning down for the month here, not a very good sign, because any break of this line, as we have been saying the last couple of weeks, any break of that line might actually be the reason why the market might go into a major bear market correction. And that's the 13-month view. Let's take a look at a 3-year monthly view, and you can see that the level the market needs to hold is here, the recent monthly closing low that was in September. The level to watch there is 7948.90, which happens to be this recent monthly closing low. Anything below that could actually be a signal that the market is now poised to probe lower prices. Keep in mind, if we ever do move below the 50 on the monthly chart, that would suggest a big down month. So the level to watch again is 7948. Anything below that is very bearish. Keep in mind, if we break here to fresh 3-year lows, and also if we move below 50 on the monthly time frame, expect a big down month. We can also see that on the daily, on the Nifty, we've been struggling to hold above this level here. And again, this level happens to be just around 61.8. Every time the market's been coming here, you can see it's been hitting some short-term highs and pulling back. We had resistance here for those highs, and again resistance here for these recent highs. So lots of resistance levels here, and now that we are trading back below the 50-day moving average, not a good sign, but the market can also easily move back below that 50-day moving average and start correcting itself if it can hold that 50 line. But the key again to be honest, is to go on the monthly chart. If the monthly chart breaks below that 7948 level, that's going to be a tell of where this market wants to go. Otherwise, if it doesn't move below that level and continues to build above that level, then maybe there's hope. So watch that 7948.90 level closely. Anything below that is a sign that things are going to get worse. Let's take a look at the South African market, and we see that we're still struggling to hold back above the previous break level. So once we broke through here, that break was decisive in bringing the market lower. We haven't been back there since. Draw a line from there. Should look something like that. And again, we see perfect resistance on that level, which might explain why we've stalled here over the last 3 weeks. So that until we can move above that red line, this market should still be struggling, in my opinion. Take a look at the daily for the South African market, and what we see here is again coming back just like other markets to test the previous break level. And we know that was a break level because if you draw a line on the break, it should be something like that. Once we broke through here, we haven't been back to that level again, and we've come back and we've been showing resistance. For example, resistance here for short-term highs, resistance here for short-term highs. We tried to hold above the line here but failed, and so this is giving us a short-term high. So net until the market can move above that red line, one can expect this market to also be struggling. Let's take a look at the Nigerian market by way of the ETF that trades in the US, NGE. Just want to show you a couple of observations. If you take the weekly closing low there and the weekly closing low right there, draw a straight line. And interestingly enough, we are coming and showing support here. So as long as that is holding, that opens the possibility of a market to grind higher. Otherwise, the risk is that if we break that trend line, now if we break this trend line, that's going to be a major sell signal. Also, there's a line connecting recent lows, if you draw it like that, on the weekly RSI. So as long as the market is showing that bounce on that same line, the suggestion is that we could start building higher. So support on that blue line is good. Otherwise, if we break below that blue line, that might suggest lower prices. So we got two things going here, in the price being support there, and also support on the price again, and support on the RSI. If both of them can hold, that's good. The risk here is that now that we have a well-defined line, if we end up breaching that line and breaking below that, that's going to open the floodgates for lower prices. But keep in mind, this market, the Nigerian market, is not out of trouble, because you can see where it's trading right now with its monthly RSI on this ETF, very close to 30.90. If the monthly RSI slips back below 30.90, expect this market to record fresh lows. So the risk is if it can hold above 30.90, it might have a chance of moving higher, right? That might be the opportunity there to hold above 30.90 on the monthly. Otherwise, if we can't, then the next swing trade is going to be for this one to probe and record lower prices, much lower than the recent lows of about 750. Let's take a look at some European markets. We begin by taking a look at the FTSE, and if you take the price channel here on the weekly and just draw something, let's draw it something like that, you can see that it connects nicely with the tails, and the recent resistance here over the last couple of weeks have come exactly on that line. So we can see that even from this chart, anything below this level here or below that trend line on the weekly suggests that the market is still going to be looking lower. It's only when the market finally clears that resistance line that maybe it might start building and eventually go higher. For now, we are looking at a lot of resistance, in my opinion. Keep in mind that right now on the weekly, we are showing resistance around the 50 level, which might suggest a market that wants to go down. There's also another simple view, which is just to draw a line that should give us the recent break. And this break here, early August, began this drop. And so if we extend the same line, something like that, you can see that the market has shown double top resistance on that line, and if this is backtest failure on the weekly, that would suggest that the next swing trade is down. For this market to move higher, clearly what it needs to do is move back above that blue line, something it hasn't done yet. There's also another line which we discussed last weekend, which is this break level here, connecting the recent lows in late last year. And once we broke through here, which was in June, once we broke that, the market has been down since, and that happens to be around the 50 level. And so if you draw that red line around the 50, you can see that every time we stall here, we had a double top over a period of weeks, which gave us these highs, and then finally the market went down. And over the last 3 weeks or so, or throughout the month of October, the market has shown a double top. So lots of things here showing that this market is struggling. And just to show you the three things, number one is the backtest line there. Number two happens to be this from the previous break level, which can be drawn like that. It happens to be around the 50. The market is struggling to hold above that. And the third aspect is the fact that this market has struggled to move back above the 50 level on the weekly RSI. So all those 3 points of resistance suggest to me that net, until we can clear those resistance lines, that generally speaking, we are looking at markets that could easily continue to pull back. On the daily, just like other markets, there is your resistance line. This resistance line happens to be at about 61.8 on the daily. We are also trading between the 200-day moving average and the 50-day moving average, which calls for a sideways market. All right, and also we see that now if we come and break this recent RSI support line, if we break that, that's when we might start seeing a deeper correction. But for now, we seem to be in a sideways market based on the fact that we are trading between the 200-day and the 50-day moving average. Let's take a look at the German market on the weekly. Here we can draw a channel here in the price. We can see that we are trading back and showing that we are coming back to test that line. Anything showing resistance here would indicate to expect lower prices, while if we can move above that line, which is very clearly well defined, anything back above that gives the bulls the benefit of the doubt. Now, to be consistent, let's take a look at the previous. So there was a weekly closing low here, and once we broke through that, it seems to me that this has now become short-term resistance here. That was the high for the week, and the market is already showing resistance there. That's one view. The other view is the line connecting the previous break. So we broke through here and we dropped hard there. If we extend the same line, you can see that we are closing the week at that level. If this is confirmed as resistance in the coming weeks, then that would suggest that the next move in the market is lower. The other view goes back to the break. So there was a break right there, middle of May, which was during this pullback here. We haven't been back to this high since then. And so we can draw a line from there, which happens to be something like that. And you can see that this has already been used as resistance before by the market, right there. And now we are here testing that level. If that is confirmed as resistance, then I continue to expect a pullback in the market. If the market is to trade well and move higher, it needs to clear that line of resistance, including the other levels of resistance that we just discussed. The same type of analysis can also be seen by the FTSE. We have the back test taking place here. So this is being tested right now. If it's confirmed as resistance, expect a pullback. If the market can clear that resistance, that's going to indicate the market can recover. And also we are coming back to test the previous break level. You can see the break right there in May, brought the market off that level. Draw a line from there, just do it in red. And you can see that this has already been used by the market as resistance once before. Resistance here for these highs. And now we are coming back to test that level. Anything showing resistance would indicate lower prices. And if the market can clear that resistance, then maybe that's when we can expect higher prices. My thinking here is, if I was to summarize this, it's very easy to see that this is resistance, continues to show resistance, so I can still expect a pullback. We also see that this is also strong resistance, and until the market can clear both lines, one should expect a pullback. If we take a look at the Canadian market, which is having a down session on Friday, so let's take a look here with about 2 hours to go. About 2 hours to go, we can see that it's pulling back ever since this break here. This break in the RSI brought the market off the highs, so we can draw a uniformity line from here. And there you have it. You can see that we hit this level twice in October on the daily, and the market made short-term highs. Now we are pulling back. Now, we might get a deeper correction if this is confirmed as a break of this trend line on the daily. On the weekly, lots of resistance levels. Number one, we are trading back below the 10-week moving average. So we are back below the 10-week moving average, which is not good. And also something we need to point out here is if the market makes a fresh low on the 10-week moving average, so if the 10-week moving average makes a fresh low, that by itself indicates that the market is going to have to record fresh 52-week lows in price, or at least fresh 52-week closing in price. Why? Because once the moving average moves to a fresh low, generally speaking, the prices have to follow. So that's the risk there. We can see that on the RSI, on the weekly, if you draw a line connecting the highs, this connects very nicely with the resistance level in the current market over the last month or so. So as long as the market is trading below that blue line, one can expect lower prices. Now, down the road, at some point, if the market moves above that line of resistance, then one can expect a recovery move. For now, it doesn't look that strong. That's one view. The other view is just to go back and take a look at the break level, which I would say was somewhere around, I guess it depends on how you draw it. Number one, if you just draw a line like that, you can see we broke down here for this move somewhere, before this move, and now we've come back and we failed to move above that line, which is why we are pulling back. If you take a look at a long-term monthly view for the Canadian market, you can see that clearly it does need to hold current RSI levels on the monthly. We've been talking about this, that this is where it's been bouncing. Let me draw that again a little bit lower. You can see that this is where it has been successfully bouncing over the last 20 years. Every time the RSI hits that level, the market has a chance of moving higher. And even here. So anything back above that green line is a good show of strength. The risk here is that we break below what has been support over the last 20 years. Any break of that level is not good. So that's a long-term monthly view. Let's take a look at a 3-year monthly view, and you can see that the level to watch is this recent monthly closing low. If it breaks below that, that's going to suggest that this market could be in for some rough period. The level to watch there is 13,306. 306.96. If it cracks below that level, be aware this market could see lower prices. Keep in mind, it is coming very close here. If it breaks, it's a big if. If it breaks the price, RSI is probably going to be also moving to fresh 3-year lows. So 3-year lows on the monthly RSI is a no-no. All right, we know that. So if that happens, that's going to be a major red flag. At the same time, if it breaks below 13,306, the monthly RSI could also be moving below 38.2, which is another major red flag. So just keep in mind, as long as it is holding above 13,306, it has a chance. But if it breaks below that, I would expect a very strong correction. And let's just call it, I would expect a major bear market. Let's take a look at the Brazilian market here with about 2 hours to go before the close, and down about 2.5%, was down almost as close to 3% for the day. I think one of the reasons why it was down substantially, in my opinion, is because we can see here that on the daily, it was moving below the 50 level on the daily RSI, which might suggest why it has been struggling. Also, we can see that just like the other markets, it had come back to test the previous break level recently, and that break level, once this was confirmed as a break, the market came down. And so draw a line from there, we can see that this is where it's been struggling, and coming into today it also hit that level, and now we are seeing a pullback. So lots of things that need to put this right. We are also trading between the 200-day and the 50-day, so a lot of confusion around here. If you take a look at the ETF that tracks the Brazilian market and draw a straight line, something like that, you see it connects nicely with the highs on the weekly RSI. So if this market is to trade and move higher, you must at least insist that it be above that line of resistance, because anything below that is going to continue just pushing the market lower with attempts to move higher. Until it can clear that blue line, one can continue expecting lower prices as far as Brazil is concerned. Let's conclude by taking a look at the S&P 500. Again, 2 hours to go before the close on Friday. Just want to show you this line here where it has been struggling ever since we broke through that trend line there. So ever since that break of the highs, we can see that the market has been struggling on this level. So if the S&P 500 wants to move higher, it needs to clear that resistance. And if this is confirmed as resistance in the coming week and weeks, one should expect the next swing trade to be lower. Since we are trading exactly on the line, we have to wait to see which way the market is gonna go. Enjoy your weekend. Eric Muathe@muathe.com. Good luck, peace, and blessings. All right, I am out. See you guys. Mwah.